Good morning and welcome to Bazaar Morning Call. I am Anuj, with me, Prashant and Sonia. We are, of course, in a market in which there is a massive global risk off. And for last 2 or 3 days, even our markets are participating in that. So that decoupling has turned into recoupling. And if you look at what's happening to the US market, fresh 52-week low for the Dow Jones, the Nasdaq very close to that. The dollar index, that's where the maximum cues are coming from. It's almost 114. And there was quite a bit of collapse in the bond market, especially in the UK, which was something which looked quite eerie. But the only solace is that because of this, Brent crude is down to almost $85. So that's helpful for India's macro, though there's global risk off. So let's see how that one pans out. And the big question is, will we survive the 200-day moving average? It's at 17,300 points away. For starters, the SGX Nifty is indicating that we'll start towards that, around 150 points down, and then we'll take it from there. Guys, good morning.
Hi, morning Anuj, morning Prashant.
Guys.
It's that kind of situation, right? A large tide sinking all boats kind of a scenario. Even for our own markets, I mean, we've been resilient so far, no two ways about that. But this week looks a bit tough. As we start off the week, most global markets have seen severe cuts on Friday. In fact, the Dow, as Anuj was pointing out, not just a 2022 low, but for the week, the Dow was down about 4% odd. Brent crude is now at an 8-month low. It's good for our own markets, but it just signifies that as we perhaps head into a global recession, demand concerns are paramount now, and that's what's hitting most asset classes. The RBI policy comes out this week on the 30th. So that's on Friday, and there is an expectation of a 50 basis points rate hike. Of course, what the governor says is more important than what he does, because inflation targeting is something that is a theme world over. There's also a large sell figure that we got from FIIs, about 2,900 crores, and in just 3 days, it's almost 6,000 crores of money that has been taken out of the Indian markets. So let's see. Just purely for today, Anuj, there is that dip that we can see, right? I mean, that's what the SGX is suggesting as well. A sharp cut, it's 160 points down now. Do you think this buy on dips theory could work, or will the market participants wait for the big event, which is the RBI policy, to get out of the way?
Sonia, it depends on what kind of dip you get. But the point I made when the September series started, that September and October are anecdotally very tough periods, and it's graveyard for option writers. So I think that still remains the case. Historically, I'll tell you one thing. This is the period in which the market normally makes some kind of a durable bottom. I mean, if the market, say, goes to 16,500, 16,600, maybe that would be a good sort of entry opportunity if you missed out on the bigger rally. For the smaller time frame, of course, you still have to see how things move, because the Indian market has been outperforming despite this fall, and the fall, while looks ugly, you would still say it's nothing compared to what's happening in the US, nothing compared to what's happening in some of the other parts of Europe, for example. So the US is at 52-week low. We're hardly 7% off all-time highs. So I think that's okay. This monthly options expiry this week, futures and options expiry actually, and there's the RBI policy on Friday. So there are a lot of events lined up. I think the asset class to track for me is dollar rupee, because that is the one that gives you, when did our outperformance break? On the day the dollar rupee finally breached 80. I think, and that's why it's important to track the money market. And for equity to rally, you need stability in currency. I mean, look, it doesn't need to go back to 79. It just needs to stop falling. And I think that is important, because from the FI point of view, you delay your purchases if the currency is falling like 9 pence. Even on Friday, you saw a sell of about 2,900 crores, and which has meant that, for the month, the FIs actually have turned negative. And more importantly, what's happening in the futures market, there's been some record short positions which have been taken, both in the US market and now even in Indian market. 36,000 shorts added in a single day on Friday. And now the net shorts for FIs is at 1 lakh contracts. Remember when it was 60,000 contracts, we said it's very high. And it's now reached 1 lakh contracts in terms of the net short position. So the levels to watch, the 200-day moving average and the 200-day exponential moving average, which are placed at 16,800 to 17,000. My sense is that there could be a test of this if the global markets remain what it is. And for the bank Nifty, the 50-day exponential moving average, which is 38,750. But for investors, as I said, this September-October period normally, if after a May-June fall, the market rallies and then in October revisits the lows, anecdotally, those lows are never violated over the next 4 or 5 years and are the best sort of buying opportunities. We'll find out if this time it's going to be different, but let's see. Prashant, hi. The global mayhem, it's pronounced.
I mean, the global mayhem, which has so far completely stayed away from India, right? Despite Friday's fall, last week the market did nothing. I mean, it was down only marginally. So let me just quickly outline. And I think to tell you the extent of the mayhem that we're talking about, just last week, Friday to Friday, the numbers will come up on your screen. The MSCI World Index lost 5%. I mean, that is the broadest measure of what the equities globally are doing. 5% Friday and Friday. Oil was down 6%. Copper was down 5.5% nearly. The dollar index went up 3%. It's knocking at 113, maybe even higher still. And the British pound lost about 5% against the dollar. I mean, what's happening in UK is a train wreck, and we can talk more about that later. Of course, Friday was a big day for the pound and sort of gilts, etc., bonds in the UK, which we can talk about. But what's happening? What's the underlying theme here? It's the same repricing of the risk-free rate, which is nothing but the US 2-year 10-year, the 10-year. And that is getting repriced higher as the Fed is, yanking rates and promising to yank rates higher till it achieves its goal of bringing inflation durably lower. So the risk-free rate is moving up. And as a result of that, risk is no longer, so as to speak, free. I mean, I'm talking about risk elsewhere. Global recession risks are also increasingly likely. There is a tightening of financial conditions. I mean, equity markets themselves coming off is tightening. And of course, when they rally and there's a bit of loosening, central banks see that way as well. All of this means that the dollar continues to be in a position where it will be sort of stronger still, even after the rally that we've seen this year. And this year so far has been one of the strongest years for the dollar. The dollar index, or you can look at the Asia dollar index, etc. So that is causing a lot of damage across emerging markets, even developed market currencies, the euro, the pound. They've got problems of their own, but they're causing problems nevertheless. And for emerging markets specifically, you want the dollar lower, not higher. I've said that repeatedly. And I think you've got the question, which is the same. Will the outperformance, and I think we've been putting this day on day, can the outperformance really continue? We're talking about, of course, a short, medium term. But I think it's important to ask, can global macros finally stop the Indian equity juggernaut? At least slow it down a little bit. We'll see. Friday we saw a glimpse. Maybe I think we have a little bit of catch up to do maybe in the short term on the way down. Just one last table will come up. We've been getting active emerging market equity funds have been seeing outflows. India gets most of its foreign inflows through emerging market funds. There are two kinds, active and ETFs. Actives in any case have been seeing outflows. Last week we got EPFR data which shows that outflows are happening in ETF funds as well. So the last number, September so far, is minus $2.6 billion. And you can see earlier it was a plus, it was positive. So August was small negative, and September the number is increased a little bit. So there is a little bit of outflow happening from both from ETFs now, and of course actives continue to be deep in the negative as well. Sonia.
Absolutely. And for now, up until now, at least the market was trending in the green, right? I mean, the Nifty was up about 3% for the year. On Friday, the Nifty as well moved into negative territory. So now we're neutral for the year, down about 0.5% or so. But still not as bad as most markets. In any case, let's kickstart the show and tell you what you'll get to see in the next 2.5 hours. First up on the equities front, Chetan Seth of Nomura says that the Fed's continued hawkish stance is creating pressure points which they think are not conducive for Asian equities. Indian and ASEAN countries have been places where investors have been hiding, but they think the room to hide in these places is also narrowing rapidly, with valuations particularly stretched in India, which is 21 times forward price to earnings and 3.2 times price to book. For now, they continue to think in Asia, defensives, quality or even value and local idiosyncratic themes and EVs, renewables, especially in Korea, may provide some relative safety.
Let's get you some money market views then. B. Prasanna of ICICI Bank says that dollar strengthening across the board, backed by the extremely hawkish outcome of FOMC, is the theme. Emerging market currencies came under pressure from capital outflows as risk assets sold off. Rupee saw volatile adjustments after the RBI let rupee trade beyond the psychological level of 80 in the coming week. Expect rupee to trade between 80.75 to 81.75 amid global risk of sentiment, with RBI protecting the currency from a sharp depreciation move. So let's see if that range holds or not.
I think that was a big theme last week, right? The RBI intervention at 80.8 and sort of protecting the currency at that level. Well, for today, on the bonds, B. Prasanna says that global yields are repriced significantly higher owing to the higher, faster, longer theme by global central banks. Domestic yields followed suit, expecting higher terminal rates in India as well. The impact was more pronounced on the OIS market as bonds continue to witness optimism around the global bond index inclusion. The coming week is an event-heavy one with the MPC, the second-half borrowing calendar and the announcement of the global index review. He expects the markets to remain volatile, ranging between 7.2 to 7.5 on the 10-year benchmark yield.
Okay, those are views across asset classes as always. Let's get some opinion in straight on the top of the show. Taimur Beg is Managing Director and Chief Economist at DBS Group Research. And we have Mark Matthews of Bank Julius Baer and Company joining in as well. Gentlemen, great to have both of you here. Thank you very much. Taimur, let me begin by asking you, India has been in a way so far Teflon coated, right? Whatever is happening in the rest of the world has had little impact. At least if you judge by outcomes. Beneath the surface, I'm assuming there is a lot of tumult. Is that coating going to sort of wear off a little bit, Taimur, as global risk-off continues? What's your opinion?
Good morning. I think that the turbulence in the emerging markets has a long ways to go. And the fact that the Indian rupee has outperformed or the Indian markets on a net basis this year has received flows, these are good markers to keep in mind that, India may still on a relative basis do well, but on an absolute basis, there is no silver lining. We have very, very difficult fourth quarter coming for us. And whether it is the INR or you go to Indonesia, IDR, or you go to Brazil, the Brazilian currency, real, everything is going to come under pressure with this relentless rise in Fed interest rates and the extraordinary strength in the US dollar. I can't remember whether it was Anuj or Prashant who said that, we haven't really seen this sort of year-to-date performance of the US dollar. Absolutely correct. I think over the last 50 years, we may have had 2 years when we've had the DXY appreciated by more than 20%. And this year we're heading in that direction. And that sort of seismic move of the key reserve currency of the world will come with massive amount of stress for the rest of the world, whether it is for debtors or it is for equity holders. Bad times are not coming to an end anytime soon.
Okay, that's an important point. Mark, good morning. So far, the Indian market has been quite resilient and has sort of survived this global mayhem. And we actually had seen money chasing Indian market as well. But off late, during the last 1 week, there's clear evidence of that money also deserting us. And the way dollar rupee has shaped out and the way the market has been playing out the last couple of days, do you reckon that the Indian market might give up the recent outperformance?
No, I don't think it will. I don't think the Nifty will come down because, number one, there's too much local money on the sidelines that wants to buy it when it does correct, because the locals can see that the domestic economy is very strong. And there's a big capex cycle that's just started, which will be financed by the banking sector, which is the biggest part of the index. And the second thing is, unlike the lead up to the global financial crisis, where you had billions and billions of dollars of foreign money going into India, up until last year, foreigners were consistent net sellers of India and even well into this year. So even if they are bearish and want to take profit on things, they don't have a lot of India to take profit in.
Okay. Taimur, good morning. I want to come back to that point you were making about how it's going to be rather tough for equity markets, or rather markets overall in the emerging space. We have the RBI policy coming up on Friday. The street is expecting, I think the consensus view is a 50 basis points rate hike. How are you going into it, and what is the kind of commentary that you expect from the governor?
Good morning, Sonia. Yes, Radhika Rao, our India senior economist, and I also believe that a 50 basis point hike is very much on the cards. For the RBI, you can see in their game book, you can see what they have been doing over the last month or so. They are worried about incipient inflation pressure. They're worried about the rupee depreciating on a disorderly manner, although relative to other currencies, it hasn't really depreciated that much. But those sort of things don't make a central bank comfortable. They do probably feel that real interest rates should be higher. They feel that the output gap from the COVID crisis has narrowed substantially. And it's not just a question of importing inflation. There are domestic drivers of inflation as well. So from that perspective, I think the RBI is doing in the right direction. It's time to take some of the froth away from the economy be it from the financial markets or from the relentless strength in consumption that we have seen so far.
No, absolutely. Mark, just a quick point. I mean, you've been you've said this, I think, 2 or 3 occasions when you've been on the program that, eventually we'll probably have a Goldilocks kind of scenario, and the market, at least in India, seems to be sensing that. Is that do you kind of hold that view, or has that changed? That has anything changed there? What's your sense, Mark?
Prashant, I was hoping you weren't going to bring that up, but since you did, you've got a good memory, sir. I was wrong. I thought that Powell was going to be bearish at hawkish Jackson Hole, which he was, but I didn't understand the magnitude of the hawkishness nor the follow-on in last week's Federal Reserve Open Market Committee meeting, and specifically the adjustment of the dot plot, which infers a terminal rate of 4 3/4 pretty rapidly, and so that's not something I saw. All I can say is that I think inflation is coming down. If you look at used car prices, the oil price, property prices. I was just chatting with a friend over the weekend who's in the food business. He said the harvest in the Northern Hemisphere will be good this year, and there's plenty of containers where they can put the food on. So I believe the inflation will come down, and the Fed won't have to raise as much as it's saying it will. But the market is once bitten, twice shy, and it's not willing to believe that. And so the Fed has got the ball in its court, and therefore I can't really say that we're heading into a Goldilocks scenario anymore, because eventually we will get lower inflation, but I think it's probably a good, at least 3 months before we've got the tangible evidence of that in the actual CPI and PCE numbers, and that's a lot of time for the market to have to withstand in a bad mood like this.
Okay, okay, fair point. Mark, just coming back to the question I asked you, I know there's a lot of local money waiting to buy, but the sheer force of FI selling, do you think that could increase from here on if global ETFs start to sell? I mean, that money chases momentum only, right? I mean, it doesn't care about macros as much.
One thing I find very weird about this year is that we have not seen more downside in a few of the emerging markets, for example, India, but also Indonesia and Brazil. There's a few others. And so I guess what I want to say is that either people don't own it and so they can't sell it, or if they do, they just really want to hang on to it for whatever reason. You have to remember China is really not in the equation anymore. So if you want to have some allocation to emerging markets, you're left with quite a small handful of large liquid markets, of which India is the biggest. So my hunch is that even if the the sentiment deteriorates globally, you won't see that big outflow that you were asking about.
Okay. So the big outflow perhaps is not coming. In any case, most global markets like the Dow, for example, is virtually in a bear market right now. I mean, it's down almost 20% this year. So perhaps a lot of people didn't see that coming, but it is what it is. Temur, what are your thoughts on the currency? Because over there as well, right, the rupee has been roiled. We're at 80 plus. There was some intervention by the RBI last week. But your thoughts on how it may shape up for global currencies, including currencies like the rupee?
So yeah, I'm very worried about the fourth quarter. I mean, my fear is that the Japanese yen, being the canary in the coal mine, heading toward 145 and beyond, and if it goes past 150, there'll be a wave of depreciation pressure in the region, starting with the RMB and North Asian currencies, but then falling into ASEAN as well as South Asia. Look, we've had emerging market crises in the past around Fed rate hike cycles. You could argue that there are parts of emerging markets that have better fundamentals. You could also very convincingly argue that India probably falls in that relative stronger cohort. But the wave, the tumult that's coming is going to affect everybody. It's just a question of which degree. And I guess that's where the importance of having good fundamentals come in, that your relative outperformance will help you. But at the same time, it's not like, there is no external currency borrowings by Indian companies. It is not like the fact that Indian private capital market is not reliant on foreign inflows. They are, and these are secular negative forces that are percolating around the world. As much as India's relative fundamentals are better, I don't think India will be immune from that at all. So we need to fasten our seatbelts.
Okay, fasten our seatbelts. I guess that sums it up, right? For the rest of the year, things may look a bit ugly. But thanks a lot, Mark and Taimur, for joining in. So that's DBS, quite cautious, I must say. The most cautious I've heard them in a while. They say that emerging markets have perhaps a lot more to go in terms of pressure, and not just for equities, but for the currency market as well.
Taimur said, I think right at the beginning, the first answer he said, the relative outperformance may still continue as compared to emerging markets because it's the best placed. I mean, the market here seems to be the best placed. But on an absolute basis,
absolutely,
you have some downside.
Some pressure.
So relative outperformance.
I think that point is taken because what was happening was the assumption was made that US, what is decoupling? That the US market will fall 20% and our market will rally 20%. That will not happen. Like Rhythm also said, you don't have fully decoupled. You fall less. If this is a massive global risk off and the global market falls 20-25%, maybe you fall less. Like
Which is not a bad scenario.
We've fallen 7%. I mean, if you take from the peak, we are down 7%. The US market is down some 20-25%. So I think that itself is decoupling.
And I've also seen many comparing the S&P and the market here. But but when you compare returns there year to date, for example, I saw S&P is down 20-22%, and the market here is down 1%. But actually, in dollar terms, we are down 8%. Year to date, and so the gap is not
that wide.
That wide. It is wide. It is still wide, and that may come off a little bit, but it's relative and absolute. And I think that point.
And just one last point: if you take the broader market, and in broader market, if you look at the number of stocks below the 50-day moving average or below the 200-day moving average, we're actually in our Nifty Junior or mid-cap and small-cap index, we are very close to what the US markets have done in their own Russell 2000 and Russell 5000. So I think in the broader market, it is still intact. It's just that on the Nifty, there are a few large stocks which are sort of masking the bigger
the pain. Okay. All right. Let's do one thing. We will talk about all of these stocks on the other side of the break, so don't go anywhere. Our entire research team will be with us to help us track the action as we begin this week. Our top 10 segment coming up. We're looking at names like Britannia, Lakshmi Organics, Natco Pharma, Suzlon Energy and Coal India that are on the radar on the back of positive news flow. There's also Anupam Rasayan, SpiceJet, PI Industries, ONGC and Oil India that are likely perhaps to open in the red. More on that in a bit. Welcome back to Bazaar Morning Call. This morning, our entire research team is joining in to help us prep for the day and tell us what are the stocks that we need to look at as we begin the day's trade. The SGX Nifty, of course, is suggesting that it's going to be a bright shade of red today, down about 130 points. But Anuj, what are you looking at today?
Well, Sonia, my sense is if the market starts, way down and if it has to recover, then you focus on relative strength. I measure at relative strength with stocks which normally bounce off from their 20-day moving average. So I think IndusInd Bank clearly has been one of the stronger stocks. It's seen a sharp correction in the last couple of days, but if gets towards the 20-day moving average, perhaps that could be the one which could bounce. And State Bank of India has really been the go-to stock in the market. For the last 1 year, every time it's dipped towards the 20 and 50-day moving average, if you bought it there, you've made money. So I think that would be the other stock. Basically, focus on relative strength. And if these stocks also start to fall, then you know that perhaps a deeper correction is coming. So that's why I'll watch out for these names. Let's now go across to Mangalam. He's watching out for Britannia. Mangalam?
Well, an important development taking place at Britannia, and you would know that, in FMCG companies, the leadership changes are extremely crucial. And out here, there has been a management change where Varun Berry, who's the current MD and CEO, has now been elevated to the Executive Vice Chairman and Managing Director. And in place has joined Rajneet Kohli as an Executive Director and the Chief Executive Officer. Now, this news is not entirely unknown because the company was looking for a CEO ever since Gunjan Shah, who was the erstwhile COO's exit in 2021. Gunjan Shah, of course, now heads Bata. But at the same time, there were murmurs of Rajneet Kohli joining as well. This is a good appointment because Rajneet was earlier heading the Domino's India business at Jubilant Foodworks. Is crucial to have, taken Domino's to around 1,600 outlets. And apart from that as well, he has 25 years of FMCG experience, having worked at both Coca-Cola as well as Asian Paints. Importantly, analysts view this as a positive move on two accounts. One, the company gets fresh legs to pursue the total foods company outlook that Britannia has. And secondly, it also paves the way for future leadership of the company, primarily as we prepare for transition, as Varun Berry's term itself ends in 2024 on March 31st. So for FMCG companies, important to watch management changes. This is extremely crucial. And FMCG anyway has been a relative outperformer in the markets currently.
All right, Mangalam, thank you very much. So we'll keep an eye, Britannia, as markets open today, and how it takes to the news flow. But we have a bunch of stocks with news flow. PI Industries, of course, is top of the list. Nimesh had put it out as part of his D Street chatter in terms of what's expected to come. There's been some promoter selling, but there are other names as well. Vivek has got that list. He's standing by. Vivek, good morning.
Well, good morning. Yes, that's right. PI Industries is in focus. Now, remember, the promoter Mayank Singhal actually held close to 18.47 stake, at the end of the June quarter. So what he's done is he's actually paired 0.7% stake, and it's a clutch of domestic as well as international names that have actually picked up stake in the Friday's block deal. So you're talking about names like Sundaram Mutual Fund, BNP Paribas. You're also talking about Morgan Stanley Fund and Mirae Asset Management Fund, some of the key names that have picked up stake. The other stock to keep an eye out for is Suzlon. Now, the company has approved a fundraising of a sizable amount. It's almost 1,200 crore that the company is looking to raise via the rights issue. The issue price is at 5 rupees a share, which is a steep 45% discount to the last closing price. And when you're talking about the entitlement ratio, for every for every 21 shares that you hold, you're entitled to 5 shares. The other one, of course, is Coal India. Some aggressive positive commentary coming in from Coal India management. What they're saying is that the company is looking to sign memorandum of understanding with 3 major PSUs for coal to chemical products. So some positive news flow coming in there. They're also looking to set up 4 surface gasification projects, and this again is the reason why Coal India will remain in focus.
Okay, thanks a lot for that. So that's on Coal India, but let's move on. Vahishta is also joining in to give us some more stocks that are in the news. Vahishta, good morning.
Good morning, Sonia. The first stock is Anupam Rasayan. This is with respect to the 12th September fire incident which took place at their plant in Sachin GIDC, wherein the Gujarat Pollution Control Board have issued directions for the closure of the plant, and the Gujarat Pollution Control Board have directed a payment of 1 crore as interim environmental compensation. Moving on to Lakshmi Organic, wherein the plant, which is located in Mahad, which is in Maharashtra, has resumed the operations post their maintenance shutdown. So some good news. Moving on to Natco Pharma, where Natco has launched the CTPR under the brand name of NatGen in the Indian market, and the current market size of CTPR containing products in India is approximately 2,000 crores. As of FY22, the agrochem business was less than 1% of sales, while CTPR could be more than 10% of the whole agrochem business. So definitely something good for the stock. And the last stock on my radar is SpiceJet, where the NCLT has directed as SpiceJet to respond to the insolvency plead within 2 weeks. So NCLT has issued a notice to SpiceJet based on an application which was filed by one of the operational creditors of the airline, which is Acres Buildwell, and the company claims that the outstanding dues are to the tune of approximately 3 crores, which are owed to it by SpiceJet.
All right. Thank you very much, Varishta, for that. Now, oil prices have come off significantly, and that is a piece of news which we can take happily, which we will take happily. ONGC and Oil India, though I'm not sure how they will take it. They'd like oil prices higher, not lower. Sonal is here with that impact. Sonal, hi.
That's right. We would take it positively, but not so much for ONGC and Oil India. As you pointed out, oil prices, they fell sharply last week, especially, and Friday as well. They saw a 5% cut, leading to an 8-month low levels on crude oil prices. They have recovered a tad bit, however, still remain under pressure. Crude prices, as I said, were down close to 5% in Friday's trading session. Fears of rising interest rates, of course, that's spooking the global economy and crude oil prices as well. And US dollar is also at the highest level in more than 2 decades. So that is something that is impacting the crude oil prices as well. Expect ONGC and Oil India to see some red. However, oil marketing companies, they have not cut prices despite cut in crude oil prices, sitting at marketing gains now. So these companies tend to benefit here.
Okay, well, thanks a lot for that. Here's a quick recap then of all the stocks that we're looking at. Stocks with positive news flow today. There's Britannia, Lakshmi Organics, Natco Pharma, Suzlon Energy and Coal India. While stocks with negative news flow, there's Anupam Rasayan, SpiceJet, PI Industries, ONGC, as well as Oil India. Let's take a quick break. Up next, Gurmeet Chadha of Complete Circle will join in for some fundamental stock analysis. We will also connect with Ashok Sharma of Greenlam Industries to talk about their business outlook going forward. Stay tuned.
Welcome back. The SGX Nifty is indicating that we'll start with a cut and then we'll take it from there down about 150 points. Gurmeet Chadha is joining us. He is the managing partner and CIO at Complete Circle. Gurmeet, hi, good morning. Thanks a lot for joining us. Let's start with some of these stocks which have outperformed, the likes of Mahindra and Eicher Motors. After the recent run, is it time to take some money home here, or do you think these stocks could continue to outperform?
Anil, my sense is I think you got to be selective here. On M&M, I think we continue to accumulate in our portfolios. 3-4 drivers. One is obviously they've been spot on the SUV trend, and I think they're headed for the SUV leadership clearly with back-to-back successful launches. Their production should pick up from almost 25,000 units a month to about 30 odd. And with improving, availability of parts and chips, and also with Scorpio adding another 4,000-5,000 units, there should be some healthy operating leverage. I think even the tractor business, which has seen like almost 3-4 months of slight contraction, while they have gained market share there, I think that should improve as we enter into a new festive season and better monsoons now, and also government initiatives. Also, I think the EV business currently doesn't figure in the overall valuations right now. It's too small, and they've just started with the first launch on the XUV400 platform, and they're cleverly again targeting the C segment in there, not the B segment where Tata Nexon has almost 85% market share. So I think better capital allocation, still about 17-18 times earning, not very expensive. So can still be added considering that the demand remains strong and we have festive season ahead.
Okay, it's been one of your favorite stocks, right? I think for the last 1 to 2 years, and now look at the rise seen. What about Britannia, Gurmeet? The management changes look pretty good. I mean, Varun Berry is now managing director. They have Rajneet Kohli on board. He comes with his Domino's experience. Would you put money afresh in Britannia?
So, Raj is a good friend, happens to be my neighbor as well. So very, very, very confident on his ability to steer things as he did in Domino's. I think Britannia also, if you see last 3 years in particular, post some hiccups in between, if you see that, volume growth has been around 10-11%. Last quarter also there was slight decline, but they had been reducing grammage, with better pricing points, and that would have, contributed. I think the total food company focus continues to be there. Also, I like the fact that now they are smart launching. They are doing while they are continue to gain market share in biscuits and other stuff. They've launched this Brisk Cafe, which is the snack with the coffee, in terms of the growing coffee culture. They're launching these 5 rupees cupcakes in East and other places. Also a couple of launches in wafers category. So I think innovation is the key here, especially when you are in this business, because the food business in general I'm very positive on. The other one which I've discussed multiple times is Tata Consumer. So I think Britannia should do well, and in an environment like this, where interest rates are going up, inflation is high, in general consumer staple companies tend to do better, and with raw materials also coming up.
Gurmeet, hi, good morning. Just a view on banks, which is probably the favorite, right? I mean, and there are indications credit growth is picking up, things are on the mend for a variety of banks, smaller ones also starting to participate. What's your view there, and will the relative outperformance there start to come under a little bit of pressure, or you think should be okay?
Prashant, some under pressure is good actually, because it's been a one way on the bank nifty. Now it's probably come below 40,000, especially the fall. So I think going forward, our calculations suggest that probably more than 55% earning growth in Nifty will come from financials, largely some of the top banks. So we continue to be constructive. Any fall is rational, as well as is good in terms of accumulating them. I think all three things are coming together. So not only the NIMs are expanding in the first stage, leading to better fee and NNI growth. Also, you see there'll be lesser provisioning. We are in a new cycle now with cleansing of balance sheet, deleveraging of corporate balance sheet taking place. Even look at some of the smaller banks which had credit costs as an issue, whether it is IDFC First or even Federal or City Union. City Union again is more trade finance. You will see there is a trend of declining credit costs. You see the restructured pool. Look at SMA1, SMA2 books. You will see there is a clear mend. And when all three come together, and now with Treasury, I think also yields would stabilize in that 7.5% kind of a bracket. I think banks will do well. So we continue to, add the larger ones, which is ICICI, HDFC, SBI, in that order, and also look at selectively some of the smaller ones like IDFC First, where we are seeing after 3 years, a credible turnaround in credit growth, and now the legacy book is just hardly 4-5% of the overall loan book.
Okay, Gurmeet, just stay on. I do know that this is a space that you look at very closely, so I'm going to invite you to listen into the conversation. This whole decorative space, I mean, laminates, veneers, allied products. Greenlam is the stock that we're talking about. The company is a net exporter, so to get a sense of how the weakening rupee is impacting business as well as the demand outlook post-monsoon, we speak with Ashok Sharma, who is the CFO at Greenlam Industries. The stock, in fact, is down almost 8% this month already. Mr. Sharma, good morning. Earlier, you had told us that you have a natural hedge on the currency, but can you just reiterate for us what is the impact of the weakening rupee on a business like yours?
Absolutely. So as we told that, you rightly said that we are the largest exporter of laminates since past 12 years or so. And we are a net exporter. We do import for our raw material, but we are a net exporter. So this weakening of rupee will have a positive impact on us.
Can you quantify for us what the positive impact would be?
Approximately of our export, around 80% we import. So around 20-25% of export will have a positive impact on our bottom line.
Okay. Ashok, good morning. What about input prices?
Yes,
how are they trending, and what's the outlook on margins?
Yeah, so input prices of late has started softening, which we are seeing in this year, and we are seeing this will continue in the quarters to come. So this will have a positive impact on the margin going forward.
Right. Ashok, hi, good morning. So chemicals, phenol specifically is about 30-35% of your input price, right? Input cost.
No, total chemical, which consists of phenol, methanol, and melamine.
Okay, and that is...
Phenol will be close... Yeah.
Sorry, go on.
Yeah, phenol will be close to around 15% of our overall raw material cost. And the prices of these are coming down for the phenol and melamine and methanol. All these are coming down.
What about paper? I mean, didn't we see significant cost inflation there?
Yeah, paper prices are going up. So in the paper, we do use the kraft paper as well as we import the decor paper. So prices of kraft paper is going up. But I think the overall, the reduction, there will be raw material price reduction.
Okay, so there's raw material price reduction. There's also 20-25% of your exports that would have a positive impact on the bottom line because of the weakening rupee. Can you just put all of that together for us? What does this mean for margins? Because your margins had fallen to about 10.7%. You were doing 11.5% same time last year. So how much could your margins improve perhaps for the rest of the fiscal?
Difficult to quantify, but I think we will be coming back near to the previous year margin going forward.
Which is what, about 12%?
I think 11.5 in between.
Okay.
I think you indicated that for some of your, because about 50% of your revenues come from exports. In export markets, there is significant churn which is happening. I mean, some companies have gotten acquired, some have gone out of business. Is there a significant opportunity opening up in the export market for a player like you?
Absolutely, yes. Absolutely, yes. Some of our markets are doing very well. Of course, some of the markets are, because of their own challenges, are facing some problem at this moment of time. But right now the opportunities are immense for the Indian companies, and especially players like us who has invested into the export market since last 15-20 years.
No, so what could this mean in terms of export revenues? Would export revenues grow much faster than what you do locally?
I think both will grow, because the domestic also there are opportunities in terms of this. So both will grow in our opinion.
Okay. So, you do have some new capacity that's coming on stream, right? So there's about a 950 crore capex that you're expecting you're putting on board over the next 2 to 3 years. What would this mean for you in terms of incremental revenues? Just trying to understand what would the compounded growth be in revenues?
So we are putting up 3 new capacity. One greenfield unit for the laminate. We are entering into plywood with the capacity, and we are entering into particle board. So all these will take around 2 to 3 years for the implement. Plywood and laminate will be implemented in this year, and particle board in this year. Then it'll take around 2 to 3 years to stabilize and reach up to an optimum level. Post this, all these 3 can generate around 1,500 crore of revenue which can come in over a period of 3 to 4 years. Apart from that, we have acquired 1 unit in Ahmedabad, which is already started running since last month, and we are projecting a revenue of around 200-250 crore out of that in 1 or 2 years.
So this 1,500 to 1,600 crore revenue over a period of 4 years, you said, after the plywood and the particle board business capex comes on board. Any of this would come in the next 1 to 2 years itself? I mean, anything in FY24 or FY23, I'm sure not, but in FY24?
Yeah. New plywood revenue come in the next year, as well as the new unit which we for the laminate also, that will also be available for the that will also be available in the next year.
Okay, just all this expansion is you've outlined for us. What about MDF, Ashok? Would that also be on your radar? I mean, now there is no non-compete, right?
Yeah, there is no non-compete. But as of now, we are not taking a call on that. As of now, we are taking a call to pursue the particle board. So as of now, we stick to the particle board.
So nothing, at least for the foreseeable future, in MDF?
As of now, we have not decided anything on that.
Okay. Just one last question. There was a broker who initiated coverage, and they said over the next 3 years, they see EBITDA for you increasing 2.5 times of your F522 numbers, driven by, of course, all this capacity expansion. Is that a fair number? 2.5 times revenues in the next 3 years?
I think difficult to comment on the broker, but once this capacity comes into the place, which will take close to around 4 years kind of a thing, and reach up to optimum level, then yeah, we can see a significant jump in the EBITDA.
Okay. Just one final question from my end. The veneer business continues to, it's a very small portion, but it continues to be loss-making. Any idea on when it will turn profitable? I mean, in this year, next year?
Prior to pandemic, this business was profitable. In the pandemic, it got a hit, and now it is. We are slowly again building up this business. Hopefully, next year onwards, we should see a positive returns in this.
Okay. All right. We leave it at that, sir. Thanks a lot, Mr. Sharma, for joining us and giving us an update on the business as well as the way forward. Gurmeet Chadda is still sitting by. Gurmeet, the stock is down almost 12% in the last 1 month. But the company is very confident of the growth going forward. They're putting fresh capex into the plywood and the particle board business. Do you like this stock?
So, Sonia, it's there on the radar, but we like other home improvement themes more because it's only as little you can have in a portfolio of 20-25 stocks. So we are more looking at tiles, something like a Kajaria, where we think the opportunity is huge considering the huge unorganized market. They're one of the largest in the vitrified and ceramic tiles in India, almost 8th largest in the world. India is also a big exporter of tiles. Also, they've done capex almost 250 crores. They've acquired some stake in a South company called MGM, and they're also getting into sanitary ware. So hopefully, you should see. I think some of the uncertainty on gas pricing is some of it is in the price. I think some of it should go away in future. So that's something I like. We also like Astral, the CPVC pipes and some of the cables and wires. And that's something we like more relatively in this space.
Okay, Gurmeet, stay on. We have some more questions for you. For now, we need to take a break. We'll come back and address the market technicals. We have Mitesh Thakkar and Sudarshan Sukhani joining us after the break.
step.
Welcome back. The global markets are showing some signs of recovery. I mean, if you look at the Asian markets, a couple of them are off the lows, and the SGX Nifty as well is off the lows now. So let's see. The markets, of course, have seen a big fall. The US market also had a big decline, but in the last hour there was some recovery. So, and if you're clinging on to any hopes, that is. Sudarshan Sukhani and Mitesh Thakkar joining us now. Gentlemen, good morning. Sudarshan, the Nifty gave up 17,500 rather violently on Friday, and it looks like we'll have a start below that now. There will, in fact, be some cushion below that. Is this now a market for the bears to try short trades on rallies, or is this still largely a buy on dips market?
Yeah, good morning, Anuj. Before I talk about the markets, there are some events which are larger than the markets. So Dr. S. Jayashankar's speech at the United Nations, I think, made 130 crore Indians proud. It was fantastic. And now we'll come to the markets. I don't think this is a buy on dips market. That much is obvious for you also, looking at the tape, looking at the price action. But it's not a short selling market, which means it's a troubling market. And that happens. I've explained my view many times that once we enter into a correction, corrections are very difficult to trade because corrections are going against the primary trend, which is bullish. Now, how do you actually go short at a 150-point gap down? That's not easy. And we don't know where this gap down will end, so it's difficult to buy. So the best trade is to look for support levels to hold. One such support level will be somewhere around 16,900. If that support holds, and then the market start stabilizing, there would be a buying opportunity. So there are days when there are really no trades, and I'm so sorry, but today is one such day.
No, that's okay.
And that applies to the bank also.
Yeah, I mean, not taking any trade is also a trade, right? Cash is a position. Mitesh, good morning. What is your index trade, Nifty and Bank Nifty?
Morning, Anuj. See, I think when we were correcting, a few weeks back, that was the month of August, towards the end of August, we got an intraday low of around 17,166. And today, I think the SGX is indicating we might open around that area. The 17,160, 150 is a good support zone. So I think I would look for some kind of a pullback from those levels. In case that doesn't happen, then I think the 200 average, which is around 16,990, that would be tested. So 70,000 then becomes the next area. So I think the market might make one low over here, though the direction will be choppy, the movement will be slightly volatile, and on the upside, you will see strong supply coming in case any rally tries to get past 17,450, 500. So let's fix that as the upper end of the range in the short term and around 17,150, or in the worst case, 17,000 as the lower end of the range. So try to explore buying opportunities around those levels. But otherwise, we've been trading with more of stock-specific buys.
Okay, and on the Bank Nifty, Mitesh, those levels?
Sorry, on the Bank Nifty?
Yes.
So on the Bank Nifty, Anuj, I think the key was that it made a fresh weekly high and then it's broken below that. So this 40,000 and 40,350 now become two important pivots on the upside. I think in the short term, any pullback to those levels will see supply and profit booking. And on the downside, 39,100 is the first support area. In case you break that, then I think the correction could deepen, go to about 38,500.
Let's talk about individual stocks then. Mitesh, let me begin with you. What are the stocks on your radar for today on both buy and sell side?
Only sell side calls today, all sell calls. Bandhan Bank is a sell with a stop at 285 for targets of 262. Couple of fertilizer names. GNFC is a sell with a stop at 682 for targets of 635, and Chambal Fertilizers, that's a sell with a stop at 336 for targets of 312. And JSW Steel is the final call. It's a conditional call, but I think it might open below that level. So sell below 665. Keep a stop at 680. Look for targets of 630.
Okay, and Sudarshan, what are your stocks?
Well, they're also primarily intraday short sells, but there's one buying idea, and I'll start with that. That's Asian Paints. Asian Paints has been an outperformer versus the index now, and it's now just showing rising momentum. It's been sideways. It has never corrected. That could be a positional trade opportunity. So consider, once prices stabilize on the Nifty, consider buying Asian Paints with a stop under 32.30. It's not an intraday trade, but so what? It's worth looking at. Godrej Consumer Products is an intraday short. The stock is now on the verge of confirming a bearish head and shoulder. Its stop loss is 900, above 900. Anuj, you'll have to adjust stop losses depending on how the market's gaps down. Hindalco is another short sell. It's broken down support levels, looking much lower. Stop loss is 405. And ICICI Prudential, another one of those confirmation of head and shoulder, bearish head and shoulder, on the verge of that. It's a short sell intraday with a stop above 556.
Right. Thanks very much, gentlemen. Great to have both of you here. You know, Anuj, by the way, the big move happening in the pound. Pound lost earlier today almost 5% in a single session. I mean, for a currency that is as big as they come. 5% is down 3% now. And on Friday, we saw a very large 3.5% sell-off by close. And I mean, of course, you know, when gilt, the bond markets in UK open later today, maybe there'll be continuation. I mean, the gilts and bond yields basically just completely sort of yields went up and bonds collapsed big time. That's basically the pound dollar that we're looking at. It's down 3%, almost 3% now. It was down 5% earlier. Actually,
I think it's a record low as well for the pound.
Yeah, it should be. It should be.
That's why, you know, Sonia was planning the UK holiday, you know, Friday. So, you know, I was wondering, you know, so why is that? So maybe because of that. But yes, you know, the way UK you know, bond market was moving. As I said at the start of the show, it was normally, you know, a big developed market. The bonds don't move like that.
Anuj, the UK 5-year gilt, the yield went up 51 basis points, right? I mean, actually, the UK 10-year is now higher than the US 10-year for the first time in almost a decade. So just incredible one-day moves. Now the second day running, maybe we'll see. I mean, I don't think it's long before we'll see some kind of policy intervention. Maybe the the BOE in the market with something. One doesn't know. We'll see. We'll take a quick break here. We are back, the pre-open, but also we'll have B. Ramesh Babu of Karur Vysya Bank to talk about the bank.